Hey, what's up, everybody? It is Monday, February 3rd, start of a new month, and it is Monday, so I just want to remind everybody that I sent out the new edition of MMT Trader. If you want to get that, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial. The link is also here. I put it here in the description below. So the question I am asking is the correction over? Is the stock market correction over? Is the economy actually still on a positive glide path, and what I thought to be a slowdown based on the reverse stabilizer effect? Remember, I was talking about that. Is that not happening? Now, I raised this question because in the latest data, and I really break it down in detail in the report, so you should go and sign up for the report. I'm just going to go into this in just a very cursory manner right now. So banking data picked up in the latest week. Now remember that's the week of January 22nd, so it's behind by a week, if not a little bit more. We saw an increase in nominal levels for just about every metric: loans and leases, bank credit, etc. So we saw an improvement. However, the growth rates of those banking metrics basically were static. They did not grow. Okay, they didn't decelerate, but they did not grow with the increase in nominal levels. But they did increase, all right? Not the growth rate, the nominal level. So that's one thing. The other thing, in terms of the fiscal flow data, now it is safe to say that the growth rate of tax deposits, in other words, taxes flowing from the economy to the government, okay, that's a net drain on income. The growth rate of those tax deposits roughly equal to the growth rate of spending. All right, now when the government spends, that's an income transfer to the economy. So you have these flows going both ways. I gave the analogy, or I've given the analogy of the swimming pool. You're filling up the pool, but the pool has a leak. The leak is taxes. If the flow to the swimming pool is faster than the leak, the water level, which is the income level in the economy, is going to rise, and vice versa. If the leak is draining at a faster rate than the flow coming in, the water level, income level in the economy is going to go down. It's about equal right now. We still need more data. Now, you might say, hey, Mike, there's nothing wrong with equal. And, that might be the case. There might be nothing wrong with equal. But when you compare it to last year, the flows into the economy from the government was going twice as fast as that leak, as that drainage due to taxes. So obviously it lifted up the end. By the way, when you think about it, even though the flows were moving in at twice the speed that the taxes were draining it out, that was only good enough for a 2% GDP growth. All right, so when the flows are roughly equal right now, I mean, if last year when that spending was going in at twice the rate of the subtraction from taxes, and you were only able to create a 2% GDP rate, and now they're equal, that's something to think about. That's something to consider. I mean, and we might indeed be in a period now of a slowdown in the economy. But I have to say that I need more data. Sometimes, let me just say this, sometimes you don't get the picture on an instant. I know everybody wants to have everything like right now. They want to have it yesterday. They want to have it, real time, at the spur of the moment. But it takes time for these conditions to develop. I mean, that's another thing. If you think about it, a lot of you out there, you think that the information in the moment is the exact information when it's not. I mean, that's another mental game fault. It's another lack of mental game when you think that whatever you are seeing in the moment, that could be economic data, that could be price, market price, and you try to ascribe some definitive meaning to that when, you know, a lot of that could be noise, or a lot of that is just a process where conditions are building. All right, we don't know yet. And again, good mental game will have you sit back and wait until there's more information. Now, I know a lot of you don't want to wait, okay? Waiting is beneath you. You are too important to wait. You want everything now. You want the money now. Okay, well, fine. Go ahead. I mean, that is one of the basic examples of lack of mental game. When I want it now, I want it now. I'm too important. I want it now. You know, I need the money now. I have to have the information now. That price that I see, that must mean something now. That must have some importance to it. No, it's not like that. It's not like that. A savvy investor, a savvy trader will wait until the end. And this is not the kind of waiting, for example, when we saw the stock market creep up last year and we had all those people on the fence, the neutrals. Remember I was talking about the neutrals? And how they were waiting and waiting and waiting until everything was just perfect and exact. No, that's a completely different situation. All right, we are, you know, and that stuff that they were looking at, basically, the market had already discounted all that. So by the time those people felt, hey, we got the full picture, that was it. They bought at the top. We saw it. We saw it in the numbers. We saw the neutrals jump off the fence. Remember a couple of weeks ago? The neutrals jumped off the fence. They were sitting on the fence all year, week in and week out, month in and month out. The highest level of neutrals, way above the historical average for the entire year. And then when the market made that moonshot, that parabolic rise all the way to the top, in like the last week of that move, they said, aha, now we're going to get in. And then what happened? With now we lose 800 points on the Dow. What I'm talking about is this is a developing situation. We need more data. It will be forthcoming. I mean, I get this stuff every single day. So my stuff is basically real time. All right, I don't look. It's not like I'm looking at 30-day-old data or what happened last quarter. No, this is real time stuff. And anyone who has taken my course, Understanding the Daily Treasury Statement, you know what I'm talking about, because we track these things every day at 4 o'clock. Boom, the number comes out. We got the checkbook of the United States government. We see the flows. We see what's going in. We see what's coming out. Bank credit is once a week, but we can extrapolate because, you know, those flows also affect bank credit. Now, there's another thing to understand here. February is a big month in terms of spending. February is the biggest month, actually, in the entire fiscal year. Every year, February is the biggest month. Why is that? You get the most IRS tax refunds in February. All right. You have a quarterly interest payment that the government makes in February, and you have the regular spending. So last February, for the month alone, it was over 500 billion. A normal month could be something like 360, 380, maybe sometimes it tops 400 billion. February generally goes over 500 billion, well over 500 billion. What does that mean? That is a huge reserve dump into the banking system. Banks are going to have to adjust, you know, and usually when we see a massive reserve dump like that, it slows down loan growth. I've spoken about that in the past. If you want to understand it, again, sign up for my report, because I talk about that all the time. So the jury is out. I would say that the data is leaning in the direction of slowdown. If that's the case, then the strategy is to sell rallies in the stock market. They are not going to last. But I'd like to see a little bit more data. So go to my website. The link is right here in the description below. Remember, I am the only one who has an applied approach to MMT. I use the concepts and understandings of MMT to invest and trade in the markets. Plus, I give you the mental game aspect, which is crucially important. You cannot make money consistently without mental game. All right, everybody. See you tomorrow. Bye-bye.